All right, everybody, I want to show you something about high dividend yields and NAV, N-A-V. I am recording from a different spot. I'm actually at work using their conference room and borrowing one of their cameras to test it out to see if I want to pick one up as well. And let me know if this camera looks nicer in comparison to the built-in. Of course it's going to. Why would I even ask? Okay, real quick here. Let's look at these. This is going to be a very fast video. I know I always say that. It's going to be a very fast video, and then it never is a fast video, right? Well, I do have to get going about my day, but I wanted to get this video out to you and go over what's called NAV, N-A-V. So you can pause this video and read more here, or Google it obviously yourself. That's all I'm doing. But it is an important part of stock market education. And so the point of NAV, and to understand it, is it's actually quite a complex calculation that will give you a value of the stock, and then in comparison to the asset value or the stock price that we see as an active, trader, right? You see the price point, but in NAV, the NAV calculation, it can help you find better stocks. That's very advanced. All you need to know for this one is NAV, net asset value, can inherently decrease the stock price even under volume when it's compared to a high dividend yield. All right. So if you want to Google more of this, it is quite interesting. It is complex. To me, it's quite confusing. You need to read it quite a bunch. But it is one you need to keep track of if you find a stock dividend that you feel is too good to be true. Generally, it's going to be too good to be true. And let's jump into that tab over here real fast. So we have a list that I found through Google of high dividend yields, or accounts, I should say, or stocks, and they will pay quite a large amount, between like 8% to 16% monthly and some quarterly dividends. Now, I jumped into a bunch of these earlier on thinking, holy cow, before I knew what NAV was, this is amazing. Why would anybody want 1, 2, or 3% dividend on a quarterly basis when you can be getting so much more? Any of the Yield Max, one of the Misty, MSTY, is one I'm thinking about currently, and it was paying back when it was at its peak. I think it was last year. I mean, it was on a nice upslope, right? And it was paying $7-8 a share. And it's like, and it wasn't only, I think it was like $30 or something like that. So it's like, hold on. Why is it that we're getting so much money per share per month and getting growth? Why would anybody do anything else? Well, the problem is that over time, the more the dividends are paid out, it actually reduces the overall value, the overall capital of what you're seeing. And that's what happened with Misty. And you can Google a whole bunch of articles about Misty. You can see that even though Bitcoin has risen to all-time highs, or even near all-time highs at the current point right now, after MSTY had already peaked, it's not keeping up. That's what NAV does. NAV erosion is what's happening there. It's eroding down the overall value of that stock because it's basically over leveraged by the dividend, and there's some other reasons to it. Now, Google more about it. Google some questions about like, why would a stock even be available if NAV is just going to keep eating it away, stuff like that. It's a lot. There's a lot more to this than this video is going to show. But I want to show you a few of these high yield accounts. If you want to Google them, go ahead. A bunch of these I've played with a little bit. Good, ticker Good, I've messed with a bit. What else did I mess with? Pennant Park, I did that one. And some don't have bad NAV, some do. AGNC was one of them that was doing great, and then all of a sudden it just started dropping. Even though the real estate market wasn't doing anything negatively, it was just bad. Even though it was getting monthly dividends, it couldn't keep up with the erosion of the actual stock price, and so I was just constantly in the red, and I was like, what is going on? Oh, beginners, lack of education. That's what it was. So AGNC at the beginning, I loved PSEC, AGNC. I loved Pennant Park, Good. I had a whole bunch of these going, thinking, yeah, I'm just going to do passive income on these dividends. Not really, because you're never going to replace your capital with a dividend, especially when it's completely eroding out in a constant slope. You had peaks, but the peaks never kept up. So, Orchid Island is another one. These are high numbers. You can scroll through this. It's a very long, very big web page. You might go through all of it and gives all the history of all the different ones. This one's 8%. Here's Good. This one's at 8%. I know AGNC was like 12%. So, anyways, be careful when you look at stocks like this. They're here, top 20 yields up to 21%. 21%, and some of them are monthly payments. Why would I not just do that? Because a lot of times, if it's too good to be true, it is. And in this case, you have to watch NAV erosion. So this is my video for you guys for Expert of the Week today is high yield dividends. I think I'm going to try to find a list or make a list of ones that I use and make that video for tomorrow. But for tonight, it's an intro to high yield dividend accounts. I keep saying accounts, stocks, your portfolio, whatever. And ones that will actually benefit you versus these that have high NAV erosion and pretty much will just continuously be taking away from you if you're long-term holding. Now you can do some swings on it. You can do charts on these. They're not a constant slope, right? It does do fluctuations. But if you were to long-term hold on some of these high dividend stocks, there's a good chance that you're going to just completely eventually be all red, and you'll never recoup that back sitting in just these stocks. So that's the quite frustrating part of it. And you don't want to dump in like 1,000 or more and have it be 800 in a few months and then 600 and then it's going away. Yeah, your share number is not changing, so your dividend is not changing unless that dividend is reduced as well, which does happen with NAV, like with MSTY. It was $6, $7, $8 a share, and now it's only a few bucks because the whole price has gone down. So you have to watch that. So this is the intro to the high dividend account, high dividend stocks that we'll cover. Like I said, I will try to do that for tomorrow's video. I don't know if it'll be that one, but this week before Friday close of my week, I will try my best to get you a list of fun monthly, overall safe, low NAV erosion, high dividend stocks that you can play with and do your own due diligent research into. All right. Well, that's going to be it for today. Nice and short, less than 10 minutes. Thank you for watching. And let me know how the mic combo video sounds. I like the ease of this video camera recording system. I think I might pick it up. And it's much more clear. Anyways, thanks so much, everyone. I'll see you in the Discord.